Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's January 23rd, 2024. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe on our channel, then go down below into the description area and make sure you're signed up for our email distribution list so that way you can be notified whenever we post these videos. We'll also let you know which stocks are giving you overbought and oversold cluster signals at the bottom of those emails. In addition to that, we're heavy users of the platform X, formerly known as Twitter. If you're not doing so already, I would encourage you to follow me at Brandon Van Zee. We really appreciate those of you that click like and repost on this Market Outlook content. And then last but not least, we do have a presence on Facebook. Feel free to join our group at that web address you see in the logo in front of you. All right, let's go ahead and dive into our daily recap. As you can see, I've got the S&P 500 pulled up here in front of us in the form of a heat map. And of course, for those of you that haven't heard yet, this is a very important week from an earnings perspective. We don't necessarily have all of the biggest tech players that are reporting this week, but we have hundreds of very important companies that are reporting. And so a lot of folks are going to be seeing their fortunes either rally substantially or perhaps going up in smoke, depending upon which side of the scale you're on. But some big movers here today, and I would anticipate seeing a lot of big movers for every day for the next couple of weeks or so. Let's go into some of the more important ones. Let's start our conversation as we typically do with the Magnificent Seven. Some of you saw my post on Twitter here just a moment ago showing all the different factors that are out there and how there were only two factors that beat the S&P 500 last year, and that was high beta and growth. And there were like a dozen other factors that could not beat the S&P 500 last year. So it kind of feeds into this concept that it is a market that is very much being driven by the Magnificent Seven. That's where you're going to find a lot of those growth elements. So let's talk about some of those tech stocks first. Microsoft, up there with knocking on the door of a $3 trillion market cap these days, was up 0.6% today. Apple was up 0.67%, so those two were neck and neck here today. We did have NVIDIA closing higher as well by 0.37%. Now on to the communications companies. Alphabet was up 0.66%, so again, kind of in the same general territory as Apple and Microsoft. And then Meta was up 0.9%, so up a little bit more, but if anything is noteworthy so far, it's that there hasn't been an aggressive move out of these Magnificent Seven stocks today. Usually when they're up over 1%. When they're down more than 1%. But today was one of those calm and quiet days, apparently, for them. Let's cap it off with the discretionary Magnificent Seven companies, which would be Amazon, and again, following the same theme, up, but not even 1%, up by 0.8%. And then Tesla was also up 0.16%. So all seven of the Magnificent Seven were up, yet not a single one of them was up 1%. I'm going to venture to guess that does not happen all that often. Quiet day out of the Magnificent Seven, as none of those ones specifically reported earnings. But as you can see, there are a lot of other bright green and red squares on the board in front of us from plenty of companies who did report their earnings here today. So let's get into some of those now. Verizon stands out to me, of course, a stock that a lot of people have laughed at here over the years, rightfully so, as those telecom stocks have had some tough times. But Verizon's actually been in a pretty significant rally here in the last couple of months, and they continued it today with their earnings announcement. Stock was up another 7% here today. Raytheon had a nice day. It's another dividend growth stock, or at least one that had the roots of a dividend growth stock. Remember, it claimed a lot of the assets from the old United Technologies that used to be a dividend aristocrat. But anyway, Raytheon, or RTX as it goes by today, also big in the defense contracting space. It had a nice session after reporting earnings. It was up 5%. By the way, Lockheed Martin also reported their earnings today. They went the opposite direction. Their stock was down 4% today. Procter & Gamble had a nice day. Some of you saw me tweeting about that one. Of course, many of you know that we've had an interest in that one for quite some time. I've owned it myself for over 10 years at this point. But Procter & Gamble had a really nice day. Typically, when you're looking at Procter & Gamble, it's a company that moves less than 1% on any random day. So when it's up 4% today, that's a pretty extreme move for it. Reason it was up so much, they reported their earnings today as well. And as I mentioned on Twitter here earlier today with the snapshot of the chart, we were able to break above some intermediate resistance area. And the good news is we held those levels as well. We did end up with a little bit of a long upper shadow on it, so it wasn't the best of closes for it, but importantly, it did hold that resistance that it broke through in today's session. So I was happy to see that. Other big movers to the upside, you could probably throw, what's this one here, Brown & Brown into the conversation. This is another dividend aristocrat, one that we don't talk about very much because it always has a very small yield. Nonetheless, this insurance company was up nearly 5% today on its own earnings announcement. And speaking of aristocrats, be aware that this is the week that the new dividend aristocrat list will be unveiled. And so, as I mentioned to my students in my class today, I will do my best to relay that information on as soon as I hear it on Twitter. So make sure you're following me there. My handle is @BrandonVanZ. And by the way, I've had a couple of imposters on Twitter here lately. One of them, we had Twitter shut down. The other, we're still waiting on. I don't know what's taking so long on it. But remember, if it says something about cryptocurrency or it's my private channel or something like that, that's a bunch of hogwash. They're stealing my picture and my name and different things like that, pretending to be me. So just disregard that if you see any of that hitting your Twitter account. But as I mentioned before, I am anticipating the new aristocrat list coming from Standard & Poor's this week at some point. Other big movers here today, PACCAR had a nice day. It was up 4% in the industrial sector. We had a lot of consumer staples companies doing nicely today. That was probably to a degree spurred on by Procter & Gamble, but you can see nice green chunks here from Mondelez and Hershey and Kellogg and General Mills and the like there. We also saw Nike and Las Vegas Sands and McDonald's doing pretty well here today. So some decent winners out there. We also had the flip side of the conversation. Let's talk about the losers now. It seemed like today was a day where the housing stocks kind of got taken out to the woodshed. Notice that D.R. Horton was down 9% today. Ugly day for it. It was the second worst performing stock in the S&P 500 behind the dividend aristocrat 3M. We'll see how long it's an aristocrat. There is some speculation that perhaps they need to cut their dividend eventually with all their lawsuits, but so far they've held strong, and we'll see if they can continue to do it. But today was certainly not their day as they reported earnings down 11%. But the D.R. Horton news, in a way, was almost more important than 3M to the overall market prospects because the housing market is very interconnected to other sectors and industries. And so when you have one of the major home builders coming out and laying an egg, not only does it bleed off to the other home builders with Pulte down 5%, NVR down 6%, Lennar down nearly 5%, but notice that it also bleeds over to something like Home Depot and Lowe's, right, in the home construction or improvement retail space. And there were a number of others that are home-related plays out there, fasteners and bolts and decking companies and all that kind of stuff took a little bit of a tumble here today based upon what we heard there from D.R. Horton. Let's go ahead and pop on over here now to take a look at the specific breadth numbers within the S&P 500 today. And it was a decent breadth day. Now keep in mind the market was up today, so that's what you would expect. So it kind of followed through with what your mind would think about. Here today, the S&P 500 had 274 components closing higher. So that's good for about 55% of the index closing in the green, with 45% closing in the red. Also wanted to mention here real quick, we had some after-hours movers today, as we will each day this week. Texas Instruments, as you can see, reported their earnings here after hours today. And I'm sad to say they are down about, $8 per share or thereabouts. So tough session there in all likelihood expected out of Texas Instruments tomorrow for that semiconductor company. Another big mover in the after-hours session that you'll hear a lot of press about is Netflix. Netflix is rocking it to the upside, up high single digits percentages, and it's going to be opening up here at about 534. Its 52-week high previously was just over 503, so it's going to cruise straight through its 52-week high. You can hear the sounds of my top-down trend trading class celebrating that in the background. Just joking, of course, but we do own this one in the class portfolio. We've done extremely well with that particular top-down trend trading class. When I counted over the weekend, over 1/3 of our portfolio holdings were hitting all-time highs. And so this will help egg things on even further with Netflix's news here after hours, assuming that it holds tomorrow. I'm fairly confident it will be up when the market opens tomorrow. What I don't know, of course, is whether it finishes higher at the end of the session. Sometimes we have some whipsaw types of days. But right now, things looking good there. Netflix, by the way, did have an announcement today that they're going to be the home of WWE wrestling, apparently. So they struck a deal with that company to provide more sports content on Netflix, and the market seemed to like that as well. A couple of other big movers after hours. I noticed that Intuitive Surgical, ISRG, is doing very nicely on their earnings announcement after hours. You can see stock closed at 371. It's trading at 392 in the after hours, so it's up over $20 per share. Love to see that if you're a growth-focused investor. And then I'll also mention eBay here real quick. eBay did come out and say that they are going to be reducing their workforce. Generally not a good thing if you work for the company, but investors are cheering as that stock is up nicely after hours there as well. By the way, this stock now is a fairly decent dividend-paying company. They've got 5 years in a row of increases under their belt. We reviewed it in one of our classes here recently. So every so often you get to see some new companies start down that journey of becoming dividend growth stocks. All right, let's go ahead and pop on over here now to our 4 grid. And this is chart 4B for those of you who are premium members following along at home. Remember, for those of you that are charter members, your renewal discounts are taking place right now, and the highest discount is right now in January and also in February. So you should have received emails from us on that, but if you have any questions, reach out to us at support@marketscholars.com. Anyway, let's take a run through the charts here and see what we can learn. The S&P 500 was up 0.29% today. As you can see, a nice gentle glide fashion higher. And of course, not only did we hit a 52-week high or an all-time high yesterday, but we kind of continued that today. Now notice that the high label is over yesterday's candle because this is based on an intraday high. But since we closed higher today than we closed yesterday, technically you could say that this is an all-time closing high for the S&P 500. Remember, there's people that, probably think that the market doesn't deserve to be where it is. And that's fine. People are, welcome to think however they want to think. But in the end, the truth of the matter is this is a bullish market environment that we find ourselves in and that we've found ourselves in for quite some time, right? This is not some sort of an overnight sensation. As you can see on this 3-month chart, the vast majority of it has this green background color. We could go back to this candle right here on November 2nd. That was the day the market forecast posture went to bullish, and it's basically stayed bullish the entire time with the exception of that 2 or 3 day window there with a little bit of a head fake in the middle. But otherwise, this has been consistently bullish. It has not even been a question as to whether the markets are bullish. It's obviously bullish. One thing I should also point out is that we do have a bullish intermediate confirmation signal out of the S&P 500 here at the moment, with the red line in the lower reversal zone. However, with the blue line way in the upper reversal reversal zone, it's not an ideal form of that particular signal. And by the way, that is the case with all of our charts today. All of them have a bullish green line combined with a red line in the lower reversal zone, and that does constitute bullish intermediate confirmation signals on all four of these indices today, even though all four of them are the non-idealized form where the blue line isn't quite where you would prefer it in an ideal setup. Anyway, Dow Jones was down a touch here today, down 0.25%, so not a big deal. You can see just yesterday it was hitting highs as well, so we're not going to get too worked up about a small give back here today. Obviously, still above its rising 30-day moving average, as is the case for all four of our charts we see in front of us. So the path of least resistance on all four of these major U.S. equity indices continues to be to the upside, and all four of these charts have bullish postures, with 3 out of the 4, S&P 500, Dow Jones, and NASDAQ Composite, with strongly bullish postures, and the Russell 2000 we would identify as kind of a weakly bullish posture with that lighter green background color as a result of its green line rising at the moment, but not quite being above the 50th percentile right now. It's at 47. So anyway, it's maybe the laggard in this move here. Nonetheless, it just goes to show that this has been a fairly broad-based advance here more recently to get the markets to where they're at and where they're positioned here at the moment. By the way, I'm sorry, not the S&P 500, but the NASDAQ Composite was up 0.43% today, so that was our leading index today. And then the Russell 2000 was our laggard. It was down 0.36%. And that'll wrap us up. That's our 15-minute recap. Remember, if you want to get me back on track with an hour-long version of the video, all I ask from you is one simple thing, and it doesn't cost you a penny. All you have to do is click like for me there on this post over on Twitter. Until next time, I want to wish you all the best of success with your trades and your investments. Goodbye for now.